Bismillahirrahmanirrahim. This is the fifth video on incremental analysis. In this video, we will solve an exercise on how to use incremental analysis concerning elimination of division and how to prepare incremental analysis concerning elimination of divisions. Please like, subscribe and share my channel to search for accounting lessons and hit the notification bell button to alert you for the latest video. For all of your questions, comments and suggestions, please put them in the comment section below. And for webinar and guest speaker invites, please send me a message at accountingamir@gmail.com. Accounting is a K. We hope that this video helps students in their academic development and teachers in enhancing their lesson plans and teaching methodologies. We also hope that this video helps fresh graduates who want to refresh their learning on how to use incremental analysis concerning elimination of division and how to prepare incremental analysis concerning elimination of divisions. So let us start with solving an exercise on how to use incremental analysis concerning elimination of division. Judy Jean, a recent graduate of Rolling's accounting program, evaluated the operating performance of RT Company's 6 divisions. Judy made the following presentation to RT's board of directors and suggested the Huron division be eliminated. If the Huron division is eliminated, she said, our total profits would increase by 26,000. In the Huron division, cost of goods sold is 61,000 variable and 15,000 fixed, and operating expenses are 26,000 variable and 24,000 fixed. None of the Huron division's fixed cost will be eliminated if the division is discontinued. So is Judy right about eliminating the Huron division? Prepare a schedule to support your answer. So we will look into the impact of net income or loss, and if we continue with the Huron division or if we eliminate. So the sales for the Huron division is 100,000. The variable expenses for cost of goods sold is 61,000, and for operating expenses the variable expenses are 26,000. So the total variable cost is 87,000 and the contribution is sales minus variable cost, that gives us 13,000. The fixed cost expenses for cost of goods sold is 15,000 and the fixed expenses for operating expenses are 24,000. So the total is 39,000 and the net income is contribution minus total fixed cost, and that will give us a negative 26,000. Then if we are going to eliminate Huron division, there will be no sales, there will be no variable expenses of cost of goods sold, there will be no variable expenses of operating expenses, and the total variable expenses will be 0, and the contribution will be sales minus total variable expenses, that is going to be 0 again. The fixed expenses, as you can see over here, that none of the Huron division fixed cost will be eliminated. That means there will be fixed expenses for cost of goods sold, still they will be there of 15,000, and the fixed expenses for operating expenses will be 24,000. so that makes 39, and the contribution minus fixed cost gives us again a net loss of 39,000. Now, if the if we eliminate, obviously there will be no sales, there will be no fixed cost, no cost of goods sold, or rather the variable cost of goods sold, there will be no variable operating expenses, and the total variable expenses are going to decrease by 87,000, and negative 100 minus, and minus will become plus, so this will be like 100,000 minus, and this is again negative 87,000, so this will be negative 100,000 plus 87,000, and this will be equal to negative 13,000. Then the fixed expenses, they are the sunk cost, and they are irrelevant as none of the fixed cost will be eliminated. So obviously 0 and 0, and the total fixed cost will be 0, and the net income will be negative contribution minus total fixed cost, that will be negative 13,000. So as we can see that Judy is incorrect, the incremental analysis shows that the net income will be 13,000 less if the Huron division is eliminated, and this amount equals to the contribution margin that would be lost through discontinuing the division. And note that none of the fixed cost can be avoided, it is already given in the question. So that is what we can conclude, that her analysis is not correct. And let us solve an exercise on how to use incremental analysis concerning elimination of division. Now, Gutierrez Company has 4 operating divisions. During the first quarter of 2014, the company reported aggregate income from operations of 213,000, and the following divisional results are given to us. We have division 1, division 2, we have sales, cost of sales, and selling and administrative, and you can see that division 1 and 2 are making a loss, while division 3 and 4 are generating income. Analysis revealed the following percentage of variable cost in each division. So these are the variable costs for division 1, and they are 75% of cost of goods sold. Selling and administrative expenses, or rather the variable selling and administrative expenses, are 40% of selling and administrative expenses. So we will look into each one of them in a while. Discontinuance of any division would save 50% of the fixed cost and expenses for that division. Top management is very concerned about the unprofitable divisions, division 1 and 2. Consensus is that one or both of the divisions should be discontinued. So first of all, they asked to compute the contribution margin for division 1 and division 2, and contribution margin is sales minus variable cost, or rather the total variable cost. Now the sales for division 1 and division 2 are 250,000 and 200,000. The variable cost of goods sold is 75% of 200,000. So 75% of 200,000 will be 150,000. The selling and administrative 40% are variable of 75,000. So 40% of 75,000 is 30,000, and this gives us a total variable cost of 180,000. Now sales minus variable cost will give us the contribution margin of 70,000. Coming to division 2, so it is giving a positive contribution margin of 70,000. Coming to division 2, we have the sales of 200,000, and the cost of, or the variable cost of goods sold for division 2 is 90% of 192,000, that will be 172,800. And the selling and administrative expenses, the variable selling and administrative expenses will be 70% of 60,000, and that is going to be 42,000. So the total variable expenses will be 214,800, and now you can see that sales minus total variable cost, this will give us a negative contribution margin of 1400. So this completes part 1 of, that is, computing the contribution margin for division 1 and 2. Next we have to prepare an incremental analysis concerning the possible discontinuance of division 1 and division 2. What course of action do you recommend for each division? So let us see, look into part B on the next slide. Now contribution margin we have already calculated, that is 70,000 and negative 14,800. So for division 1, the contribution margin is, if we continue, is 70,000, and for division 2, if we continue, will be negative 14,800. Then we look into the fixed cost. Now 75% is variable, that means 25% of 200,000 are going to be fixed. So 25% of 200,000 is going to be 50,000, and 40% are variable, that means 60% of 75,000, that will be equal to 45,000, will be fixed. Selling and administrative expenses for division 1, and the total fixed cost will be 95,000, and this will give us, in this case, this will be a loss of 25,000. That is contribution margin minus total fixed cost give us the net income or net loss, and here since the result is negative, it means it is loss. Now if we eliminate, there will be no contribution margin. You can see the 50% of the fixed cost and expenses would be saved. That means 50% are still there, that means 50% of 50,000 is 25,000, and 50% of 45 is 22,500. So the total fixed cost will be 47,500, and contribution margin minus total fixed cost will again give us negative 47,500. Now the net income obviously is going to decrease, because if we eliminate, and it will decrease by 70,000. The cost of goods sold is going to be decreasing by 25,000. The selling and administrative expenses are going to decrease by 22,500. So the impact is, it will be the total, will be 47,500, and contribution margin minus, and don't forget this is in bracket, this is negative, minus and minus becomes plus. So negative 70,000 plus 47,500 will give us negative 22,500. Okay, now we move on to the division 2. And for division 2, the variable are 90% of 192,000. That means 10% are going to be fixed. So 10% of 192,000 will be 19,200. And 70% are variable. That means 30% of 60,000 are going to be fixed. That is 18,000. So we have fixed cost of goods sold 19,200, and fixed selling and administrative expenses are going to be 18,000. That makes 37,200. And negative contribution margin minus negative for 14,200 minus 37,200, this will be negative 52,000. If we eliminate, obviously there will be no contribution margin. The cost of goods sold will be there because 50% are going to be saved 9,600 of 19,200, and 50% of 18,000, that is 9,000. So this will be equal to 18,600, and contribution margin minus fixed cost will give us 18,600, and this is negative. Then we go for the net income, and the net income will be again, if we are going to eliminate the contribution margin now, it will be 14,800 plus. The fixed cost will be negative 9,600. You can see 0 minus, this will minus will become 9,600 minus 19,200 will be 9,600. 9 minus 18 is going to be negative. It is going to be negative 9,000 negative, and the total will be negative 18,600. So now you can see that we have 14,800 and minus 14,800 minus, and minus will become plus. So this will be plus 33,400. So this is the incremental analysis of division 1 and 2. And we go to the second part over here. What course of action do you recommend for each division? Now, if we look into division 2, it should be eliminated because it is giving a negative contribution margin, and income from operation would increase by 33,400 if division 2 is eliminated. Now, regarding coming to division 1, division 1 should be continued because it is producing a positive contribution margin of 70,000, and income from operation will decrease by 22,500 if division 1 is going to be discontinued. So this completes part B of the problem, and we move on to part C on the next slide. Prepare a columnar condensed income statement for the company assuming division 2 is eliminated, and we will look into how we do that. So the company wants to eliminate division 2. They want to eliminate division 2, and let us see what happens. So if they are going to eliminate division 2, so let us look into the sales for division 1. Sales for division 1 is 250,000. Sales for division 3 is 500,000, and sales for division 4 is 450,000, and this gives a total of 1,200,000. Regarding the variable cost of goods sold, for division 1 it is 75% of 200,000, and that makes 150,000. The selling and administrative are 40% of 75, and 40% of 75 is 30,000. So the total variable cost is 180,000, and the contribution margin is sales minus total variable cost, that will give us 70,000. Coming to cost of the fixed cost of goods sold, now since 75% is since 75% is variable, it means 25% is fixed. So 25% of 200,000 will be how much? Okay. 25% of 200,000 will be 50,000. Now, there is what is very interesting over here is that when we talk about the fixed cost, because it is 50% of this would be saved, that means we are for the fixed cost for division 1 will be the fixed cost of goods sold plus 1/3 of division 2's unavoidable fixed cost. And why we are saying 1/3? Because the total fixed cost, 50% is going to be saved, and the remaining has to be shared by the other three division 1, 3 and 4. So first of all, we have the fixed cost of division. So let us see. So let us look into the division 2 fixed cost, and the cost of goods sold is 192, and 90% is variable. That means 10% is fixed. So 10% of 192,000 will be 19,200. 10% of 192,000 will be 19,200, and from this 50% are going to be saved. So half 50% into 0.5 or into 50, 19,200 into 50%, and this will be 9,000 to 9,600. Now we have the fixed cost of 9,600, and this fixed cost has to be shared by the three divisions. So we will divide this by 3 again, and this means this is equal to 3,200. Now we have for division 1 we have 25% of 75. For division 1, 75% is fixed, is variable. That means 25% is fixed. So 25% of 200,000 is 50,000 plus the unavoidable fixed cost of goods sold for division 2, that is 3,200. So this makes 53,200. Now coming to the selling and administrative expenses, So this 3200 will be for all the three divisions. Now I will go for the selling and administrative in a while. Let me explain for the variable cost and fixed cost of goods sold for division 3 and 4. For division 3, the variable cost of goods sold is 80% of 300,000. So 80% of 300,000 will be 240,000. And the selling and administrative expenses are 50% of 60,000, that makes 30,000. So this is equal to 270,000, and sales minus contribution minus total variable cost will give us the contribution margin, and this will be equal to 230,000. For division 4, the variable is 75% of 450,000. Sorry, 75% of 250,000. So 75% of 250,000 is 187,500. The selling and administrative are 60% of 50,000. So 60% of 50,000 will be 30,000. And the total variable cost will be 217,500. Now we know that contribution is the same, that is sales minus total variable cost, and that is equal to 232,500. The fixed cost for cost of goods sold for division 3. Now the variable is 80% for division 3. For division 3, the variable cost is 80%, that means 20%. 20% is fixed. So 20% of division 3 of 300,000 is going to be 60,000. Now 60,000 plus the unavoidable fixed cost of division 2, that is 3,200. So 60,000 plus 3,200, that makes 63,200. For division 4, the fixed cost is, because 75 is variable, that means 25% is fixed. So 25% of 250,000 will be the fixed cost, and this will be plus 3,200. So 250,000 minus this will be equal to the cost of goods sold. This will be equal to 65,700. You see, we have 25% of 250, that means 1/4. So 1/4 will be 250,000 into 1 upon 4. 4 6 are 24, and 24 1 0, 4 2 is 8, 62,500 plus 3,200, and that gives us 65,700. That is what we have over here. Then we go for the selling and fixed cost for selling and administrative expenses, and we will follow again the same steps. We will first of all calculate the selling and administrative expenses of division 2 that are unavoidable, and for division 2 we have selling and administrative of 60,000, and from this 60,000 70% is fixed, is variable. That means 30% is fixed. So we have 30% of 60,000, that is equal to how much? 30.36 18,000. Now from this 18,000, you can see 50% are going to be saved, so and 50% will still be there, so 0.5, that gives us 9,000, and this 9,000 unavoidable fixed cost of division 2 will be shared by the three departments, and this will be equal to 9,000 divided by 3, and that is equal to 3,000. Now the fixed cost for division 1 is 60% because 40% are variable. So 60% of 75,000, 6 5 is 42, that will be 45,000. Division 1 is 45,000 plus 3,000, the unavoidable fixed cost of division division 2, and this is equal to 48,000. Then for division 3, it will be again, you see division 3 is 50% of 60,000, and 50% of 60,000 is 30,000 plus 3,000, the unavoidable fixed cost of division 3. So 30 plus 3 is 33. Then we have for division 4. For division 4, it is 60% is variable. That means 40% is fixed. So 40% of 50,000, that will be 20,000. 4 5 is 20 plus the unavoidable of division 2, that is 3,000, that makes 23,000. So now we can make the total fixed cost, and the total fixed cost are 101,200, and contribution margin minus total fixed cost. Now here this will be negative, and this will be negative 31,200. For division 3, the total fixed cost will be 96,200, and contribution margin minus total fixed cost will give us a positive 133,800. For division 4, the total fixed cost will be 88,700, and contribution margin minus total fixed cost will be 143,800. So the cost of goods sold will be total cost of goods sold will be 577,500, the total of 150 plus 240 plus 187, and the total variable total selling and administrative will be 90,000, and the total variable cost will be 667,500, and the contribution margin will be sales minus contribution margin, that is 532,500. The total fixed cost of goods sold will be the total of these three again, and that will be 182,100. The total fixed selling and administrative expenses will be 104,000, and the total will be 286,100. This is the total fixed cost. Now we have the contribution margin and we have the total fixed cost. So contribution margin minus total fixed cost will give us 246,400. So this is what the columnar condensed income statement for the company is, and we have used the cost volume profit format. Sales minus, we have used the contribution margin in our discussion. And now they ask us to what course of action do you recommend for each division. Division 2 is a so for each, so that is what we have done. Okay, and now we go to number D. So that is number C, that is what we have completed, and we go to number D. Reconcile the total income from operations 213,000. Now unfortunately I have not gone into this part, so I will intentionally just ignore this part C in the explanation right now, and we move on to another exercise. And here again we are going to see uh, how we look into the elimination of division. Now Panda Corporation has 4 operating divisions. During the first quarter of 2014, the company reported aggregate income from operations of 129,000, and the divisional results shown below. Let me see if I have gone to part D over here also or not. Yes, here I think I have done, and we will talk about it. Okay. Again we have 4 divisions, and in this case now division 3 and 4 are making a loss, and these are the percentages for the variable cost. Discontinuance will save 50% of the fixed cost, and they are looking for division 3 and 4, and the consensus is that one or both of the division should be discontinued. So for this again they asked to compute the contribution margin for the division 3 and 4. So we have division 3 and 4, and we have the sales 310,000 and 170,000. The variable expenses are cost of goods sold for division 3 is 70% of 270,000, and that is 189,000. For division 4 it is 90% of 156,000, that is 140,400. The selling and administrative are 60% of 75, that makes 45,000. And for division 4 it is 70% of 70,000, that is 49,000, and the total variable cost is 234,000 and 189,400. So the contribution margin is sales minus total variable cost, that is 76,000 for division 3, and for division 4 it is 170 minus 189,400, that gives a negative 19,400. Okay, so this completes part A, and we go to part B on the next slide. prepare an incremental analysis concerning the possible discontinuance of division 3 and division 4, and we will talk about the course of action later on. So for this, first of all, we have the contribution margin, and the contribution margins were 76,000 and negative 19,400. So this is for division 3, it is 76,000, and this is negative 19,400. The fixed expenses, now we have 70% as variable, that means 30% of 310,000. 30% of 270,000. This will be equal to 81,000. And the fixed for selling and administrative will be 40% of 75,000, and that will be 30,000. So the total fixed cost is 111,000. If we eliminate, there will be no contribution, and because 50% are going to save, that means 50% of this amount are going to be relevant, 40,500, and 50% of this as well, that makes 15,000. So the total fixed cost will be 55,500, and we know that contribution minus total fixed cost is negative 55,500. So here the income, there will be a loss, and 76 minus 111, that makes 35,000. Now let us look into the increase. Obviously the contribution margin will decrease. 50% is going to be there, 40,500, and this will be 15,000. So this will be a total of 55,500. And 76,000, this is negative, minus 55,500, this is going to be equal to 20,500, and this will be negative again. For division 4, we will follow the same steps, and for division 4 we have the contribution margin, and then we have the fixed expenses, and we have the cost of goods sold. 90% is variable, that means 10% is fixed, and 10% of 15,600, 156,000 is 15,600, and 30% is variable, that means 30% is fixed. So 30% of 70,000 is 21,000, and the total will be 36,600. Now sales, once again, contribution minus fixed cost. So this is negative, and this will also be negative, that makes negative 56,000. Now when we come for the elimination, obviously there will be no contribution margin if we eliminate, and 50% is going to be relevant, that means 7,800 of this amount, and 50% of 21, that is 10,500. So the total is 18,300, and contribution minus fixed cost, this will give us negative 18,300. Then we look for the net increase or decrease, and when we look for the, now if there is a negative contribution margin, if we eliminate, this becomes positive 19,400. This becomes 7,800 is the saving, 10,500. So the total here for the fixed cost is 18,300. Now 19,400 minus and minus will become plus, so this will be 37. I can put this in negative there to avoid any confusion. So 19,400 minus minus becomes plus, this will be 37,700. So what we can see from this information, that for division 3 this should be continued, and the reason is that the contribution margin will be 76,000, which is greater than the savings in the fixed cost of 55,500. So this will result that would result in the elimination. So the income from operation would decrease, as you can see, by 20,500. So division 3 should be continued. When we look for division 4 should be eliminated because it is producing a negative contribution margin, and income from operation will increase by 37,700 if we discontinue division 4. Okay. Next we go to part C, prepare a columnar condensed income statement for Panda, assuming division 4 is eliminated. So division 4 will be eliminated and these three will continue. That means the cost of division 4, and that also only the fixed cost, 50% of the fixed cost of division 4 has to be shared by or absorbed by the other three divisions. And let us see how we do that. Now we have division 4 is going to be eliminated, as it is said division 4 is eliminated. So we have sales for division 1 510, 400 and 310, 510,000, 400,000 and 310,000. So this gives us 170,000. Then we have the variable expenses, and the variable expenses for division 1 are 70% of 300,000, that will give us 210,000. The selling and administrative are 40% of 60,000, that makes 24,000. So the total variable expenses are 234,000. And the contribution margin will be sales minus total variable cost, that is 276,000. We will talk about fixed cost in a while. Let us first of all look into the variable cost for division 2, and that is 80% of 250,000, and 80% of 250,000 is 200,000, and 50% of 80,000 is going to be 40,000, that makes 240,000. So sales minus contribution minus total variable cost will give us the contribution margin of 160,000. We will also calculate the variable expenses for division 3, and they are 70% of 270. So 70% of 270 will be 189,000. And the variable expenses for selling and administrative are 60% of 75,000, that is 45,000. So the total variable expenses are 234,000, and the contribution margin will be sales minus total variable cost, that is 76,000. We can make the total also at the same time. This is 599,000. This will be 109,000. This will be 708,000, and this is the total, the variable cost, and total sales minus total variable cost will give us a contribution margin of 512,000. Next we go for the cost of goods sold, and just make a note that the cost of goods sold will be the fixed cost of each division plus the division 4 unavoidable fixed cost. And for division 4, let us see how much is the unavoidable fixed cost. So it is 90% is variable, that means 10% of this of 156 is going to be this is for division 2, division 4. The unavoidable this is 156,000 and times 10, this will be 15,600, and 15,600 and then 50% of the fixed cost is going to be saved, that means 50% is still are there. This is equal to 7,800, and this will be distributed among the 3 divisions that are continuing. So we will divide by 3. So 3 to the 2,600. Okay. Now we can look into the division 1 fixed cost. For division 1 fixed cost, you see we have the total for total cost of goods sold as 300 is 300,000 is the total, and the total variable expenses are 234. So 300 minus 234 plus 2,600. So 300 minus 234 is going to be equal to 9, how much? Sorry, 300 minus 210. So this will be 90,000. For division 1, it will be 90,000 plus 2,600, that is 92,600. For selling and administrative, it is 60,000 minus 24,000, that will give you 60 minus 34 will be how much? 60 minus 24 is and we will we have to calculate for, so we'll ignore, just wait. So we have 92,600 as a fixed expenses for cost of goods sold, and for division 1 we have already put the value. For division 2 it will be 250,000 minus 200,000, so that gives us 250 minus 200, that is 50,000 plus 2,600. So this will be 52,600. For division 3 again it is 270 minus the cost of goods sold, for the variable cost of goods sold 189 plus 2,600, this will be equal to 83,600, and this total will be 228,800. Then let us look into the selling and administrative, or the fixed selling and administrative. And for this again there will be we have to look into the selling and administrative of division 4, and 70% are variable, that means 30% are fixed, and 30% of 70,000 So 30% of 70,000 will be how much? 3 7s are 21,000, and from this 50% are going to be saved, so into zero point 0.5, so this will be equal to 10,500, and this will be distributed among the three remaining divisions, so that means 3,500. So this is for the selling and administrative expenses that are fixed for division 4, that are unavoidable, and this will be shared by the remaining divisions. And let us see how we progress for that. Now the selling and administrative for division 1 are 60,000, and for the variable they are 24. So 60 minus 24 plus 3,500, and this will be equal to 39,500. So the total fixed cost will be 132 100, and contribution margin minus total fixed cost, and this will give us a income of 143 900. Then we go to division 2, and for division 2 we have this 70% are variable, the total selling and administrative are 80, and from this 40,000 are variable, so 80 minus 40 is 40 plus the 3,500, so that makes 43,500. So the total will be 96,100, and contribution minus total fixed cost gives us a income of 63,900. Coming to division 3, for division 3 we have the selling and administrative is 75, and here we have 45, so variable, so 75 minus 45 is 30,000, and 30 plus 3,500, and this is equal to 33,500. So the total will be fixed cost will be 117,100, and from this total contribution minus total fixed cost will give us a loss, a negative of 41,100. So we have the total fixed expenses of 228, and then to this we add the selling and administrative, that is 116,500. So the total fixed expenses are 345 300, and contribution minus the total fixed expenses will be give us a income of 166 700. So this has a interesting observations, and we have prepared a columnar condensed income statement using the cost volume profit format. uh, and now they say reconcile. So first of all, if you look over here, so the income from, you can see the income from operations with division 4 of 135 that was given, plus the incremental income of 37,700 from the eliminating division 4, this is equal to 166,700. Okay, then okay, so I have not prepared a template for part D, So I'm sorry for that, and with this I will complete this video. And in this video we have learned about how to use incremental analysis concerning elimination of division and divisions. And I hope you have enjoyed this presentation, and if you found value in this video, then please like, subscribe and share my channel and hit the notification bell button to alert you for the latest video. For webinar and guest speaker invites, please send me a message at accountingamir@gmail.com. Remember, effective questioning brings insight, which fuels curiosity, which cultivates wisdom. If you have any question or any suggestion regarding this session, then please put them in the comment box below or by email, and inshallah I will reply you back. Thank you so much and happy learning.